Hey guys, welcome back to the channel. I hope you are having a good weekend. Today we are going to look at the fundamental and technical analysis related with the major currency pairs, indexes, and also the leaders of the crypto market. We will begin shortly in 1 minute. Just one moment. Oh, so everything looks fine as I see. We can go on with the fundamental part to see what we may face during this week, and later we are going to look at the technical analysis. Question that you may have. So, as a beginning, we are going to look at the economic calendar. As I checked shortly, the coming week has not many significant data, so we have to be careful. We should not anticipate big moves in the market, but we are going to look at of this data one by one. So at the opening of the market tomorrow morning, the Bank of Japan, we have the Bank of Japan monetary policy minutes. It will be a short summary of their decision that they did during the previous week. I don't think that this is going to create any at all in the market, considering that they didn't do anything during the interest rate decision. Everything was old, so there is nothing to scare about during this moment. Later, in the opening of the market, we have factory orders. These are important data from Germany. However, slight moves can be seen on the euro pair, so it's not expected to have big moves. Considering that this corresponds also close to the opening of the London market, probably we can see some bullish or bearish volume during the opening because the market has to absorb also the news as well. Later, we have the same data from Eurozone. I'm not expecting anything big. And as you can see, also the rest of the day is almost empty for Monday. Let's move on. What we have here, we have some data from China, exports, trade balance. So these are the monthly and yearly data. As you can see, trade balance as well, that is very important. This is important here. Probably we may see moves on the related with the Australian dollars. However, the focus for today will be related only with Australia interest rate decision. Uh, I find this a bit strange this time, considering that the market is anticipating an increase on the interest rates. The interest rates were previously increased to 4.1 on June of this year, so it was 3.85% on May, and on June it was increased to 4.1. Since that moment, the Bank of Australia didn't increase the interest rates, so we have from June, July, August, September, and we are in October, so this is the fifth month that the bank didn't increase the interest rates, and it is not making sense at this moment to have an increase. What I think is that considering also the previous meetings that they said that it's too much, and they have to see the market impact in their economy, this increasement or this expectation here at this moment is not making sense for their decision. So this is market expectation. Probably they will hold in the same area, in the same price. And how I see is that this is not going to impact Australian dollar, considering that the market saw this whole decision for 5 months so far. I don't think that they will increase. The only problem is that if they're going to do any surprise and to increase the interest rates, this is going to create it's on the Australian dollar. But I find this very difficult considering all the previous decisions. Their economy is performing very well. Inflation data are very good as well, so they are slowing down. This is the reason that I don't see this coming to 4.35. However, this is the only market mover that I saw here. During the opening of the London market, we don't have anything. These are only soft data that we can see. Also from Germany, soft data again. Producer price index. This may create some price volatility during the day, but it will be only for short term, probably 20 to 30 pips moves up and down related to the euro pairs, but not anything significant here. And also, during the rest of the day, after the opening of the US market, we may see that we don't have important data. We have exports from Canada, imports, goods and services trade balance. So there is some data, goods trade balance, Fed's Waller speech. I'm not expecting anything here to happen during these moments from this speech. On Wednesday, we have the Reserve Bank of New Zealand inflation expectations. This is going to be very important related with the inflation numbers. It will be a bit difficult to anticipate this indicator this time because New Zealand had also some movements on the employment data. So let's see what is going to happen. Probably it is better to trade after the news. Harmonized index of consumer prices. This is year to year related to Germany. It is not expecting any price increase. And also Germany is not doing uh, anything big with this indicator, so it is moving in the same areas. And it is likely that we may see that the numbers may come according to the expectations. We have again during Wednesday the Bank of England Governor Bailey speech. Also during the speech, I'm not expecting anything interesting. It is read because they may share different things. However, I'm not expecting anything interesting here. Thank you so much to everyone that is joining right now. I really appreciate it. If you have any question, please let me know. We have also Fed's Chair Powell speech. Nothing interesting also here. I don't know what this speech is related about because we had the FOMC during the previous week. On Thursday, all of these data are very soft data, so it looks like the economy calendar is fully loaded, but all are very soft data. Consumer price index from China. We have seen China to perform very well during the last 2 months. This is going to impact mainly the Australian dollar and after that the New Zealand dollars, but it is related more with Australian dollar. Probably this may impact Australian dollar for good, in my opinion. So let's see. During the day we have ECOFIN meeting all day, economic bulletin from Eurozone. It is not expecting anything here, so it's only small move, probably small moves or nothing. And also during the opening of the US market, all the data are very, very soft, as you can see. Okay, so on Friday, November 10, we have the Reserve Bank of Australia monetary policy statement. This is related with the interest rate decision that we have on, on Tuesday. It was on Tuesday, yeah. It's a bit strange because the Bank of Australia is releasing the monetary policy statement some days after. It has done this also during the previous time. It should not impact the market because it's the same thing related with the interest rate decision. If they are not going to make changes on the interest rate decision, then the monetary policy statement should be as the previous month. So it should be without market impact. During the day or during the opening of the London market, we have GDP data from London, from the UK. These are very important data. We have seen that UK is not doing good, but is not doing bad as well. So they are just moving in the same zone. We have seen the British pound to recover lately, so it is likely that we may see some bullish moves from the British pound during this data. And again, if we are going to look at the economy calendar is almost empty, and we have only one indicator from the US, Michigan Consumer Sentiment Index. This is going to create some volatility, but it will be only for the end of the day during Friday, and it should be a limited move overall. So as you can see, if we are going to make a summary, the only important data or the only important events that we are going to have during this week are going to be the Bank of Australia interest rate decision. We have CPI data from China on Thursday and the GDP data on Friday. The rest of the day will be almost empty. So what we may expect is very important. Just one moment to check the comments. Thank you so much for joining. Thank you guys for your comments. Thanks for your previous analysis. I don't know the problem with the voice. It should be related from the streaming program that is incorporated with the website. I'm sorry, I can't do anything at all about it. What we have to be careful is that during this week, if we are going to make a summary, it is likely that we may face more correction. We may not see clear market moves, and we have to be patient. So we don't have to jump in the market and to expect big moves. The reason that I keep repeating this is that, as you can see from the dollar index, that is our leading indicator for the US dollar, we can see that during the previous week, the price already broke down from this structure. So what this is showing for us is that it is likely that the price may continue moving down further, and this is growing the chances that we may see a weaker US dollar. But what may happen during this week related to the US dollar? On daily chart, we can see that the price broke down from this case support area. Now this is turned into support, and the possible retest before the big movement has chances to happen at this moment. Considering that the week ahead will be very weak, so we don't have strong economic data to push the price down further, probably during the opening of the market, we may see a small bearish move, and later we may see any correction. We have to be very careful during this correction, in my opinion. It can be a small correction and it can be ready for the next week for a deeper bearish move, or we may see also a deeper correction before the price moves down for the dollar index. This is what I am already expecting here. Overall, also if we are going to look at the weekly chart, we may see that the bearish candle that closed already invalidated many weeks. 1, 2, 3, 4, 5. So 5 weeks were already invalidated in this area here. That is why the movement that we saw from dollar index during the previous time, it was very significant. However, one step at a time, this time it looks like we may see the dollar index and also the US dollar getting weaker during the coming weeks probably. However, we have to be careful from any big move. It can do one scenario like this one for a type of fake breakout, or the price may stop close to 105.6 and it can move down. All of these movements are possible, so we have to focus how they will take shape during the coming days. This is overall for the dollar index. The next one that we are going to look at, the next one that we are going to look at is Euro USD. As we saw this previously, the price was close to the bottom of the structure. And as I explained, we are looking at for two possible areas, and the price already reacted on the first zone. So far, we may see this bullish breakout. And in the current conditions, after the first analysis that worked out very well, for the US dollar, we may see that the price already broke out from a strong zone as well. 106.9, 1.0690 was a very strong area. We may see also a bullish breakout and the price closed already above the structure. And it is likely that during the coming weeks, we may see Euro USD growing further. However, exists also another scenario that I would like to pay close attention to, and we have to be very careful because we are not market makers. We saw the same move also during the previous time related with Euro USD. The price broke out from the structure area, created the same bullish breakout, and later we saw the price coming down in a possible bigger bullish movement, and it would be required even a bigger accumulation, and we may see big speculation before the price moves higher. So overall, we cannot say that we are in a possible bullish trend so far. It can be too early, but the price is doing ups and downs, and it keeps confirming that probably we may see a bullish trend very, very soon. This is going to happen for the coming week. It is likely that the price as a maximum should come close to the top of this structure, close to 1.09. Considering that during FOMC and the non-farm payroll data, the price didn't manage to grow more than 200 pips, I don't think that it will find the power during this week and also during the coming week to increase by this amount of pips here. That is why we have to be careful, because everyone should understand that something is happening and probably the market is going to change the price direction. It will be require time. However, this is a movement that has higher chances to happen. We can also take other targets in this area. We have also minor structure zones where we may see potential taking profit areas for Euro USD. Also, this is possible. So we should not focus only on the big moves, but we have also small moves that can give up to 100 pips, which is not bad at all. So this is also the picture for Euro USD. One of the members is writing, currently I'm using mobile in analyzing. Please make those points visible or read them kindly. So please, you should know just a piece of advice. You should never use your mobile to analyze because it's very difficult. You are going to create more losses than profits in that way. So it is not the right way of doing the things if you are going to invest money. So just do your own work, please. Mobile, it is not work for analyzing. Probably you may use your mobile to execute your trades because it's easier sometimes. I use it very often, but never to analyze the charts. The charts should have a clear way of analyzing. I don't know why the voice is not clear because it should be related with you, I guess. It is not my problem. Also, the internet connection is very good as I see. For USD, and which is the second one related to the currency pairs, I think that we should be very careful again. As I explained also during the previous time, the bearish movement was going to happen only if the Bank of Japan is going to intervene in the market. So if one is shaping targets like this one here and even lower, and it is obvious that after a long period of time we may see USDN creating this big movement down. However, as long as the Bank of Japan will not intervene in the market, we have to be very careful with USDN. Despite the fact that also the counting that I'm looking at for USD, it keeps extending the last waves, but the problem is that the Bank of Japan is not doing anything at this moment. Uh, Also, the current moves are not related with the Bank of Japan at all. These are moves related with FOMC and the non-farm payroll data. I explained also before FOMC and before non-farm payroll data that this movement was likely to happen only uh, on softer FOMC tones and the non-farm payroll data. It happened, but it was very risky because the market is still supporting the idea that the Bank of Japan will not do anything at all. So I wouldn't be surprised that during the coming week we may see the price to increase again and probably to move down again. In the current conditions, Euro USD, USDN, sorry, is blocked in these areas here that we can see very strong support and resistance close to between 129 and 151.50. This is the area where the price is stuck for the moment. We have to be very careful because I don't see a bearish continuation movement to happen very easily. Only the Bank of Japan is going to do this move. Another problem that I have explained previously is the swap. You are going to sell USDN. This is going to create big losses also from the swap accumulation or the overnight rate that is called in a different way. That is why USDN is not very good to hold this for a long period of time because it will create only losses even if it is not going to move at all from the zone where you sold. Cartoon Kiladi is asking, what about crypto market? Yes, I will explain in 1 minute. Also Bitcoin and Ethereum. Just be patient, please. Thank you for asking. Related with gold, on a daily chart, we can see that the price already stopped in this area during these days. According to our expectations, the price was already blocked in these 2 points here between 2007 and the lowest low was created on 1070. So far the price is not ready to move down or to increase for the moment. I don't know what should happen because the market is waiting for any news from the war front. But during the previous time that I shared this analysis, it was on Friday, November 3rd, we had two possible trading opportunities, and we can see that the first bullish target was reached. Despite the fact that I explained this with two possible scenarios, it was likely that the price was going to reach the first target close to 2000 and 2006. The reason was simple. about this approach. It was related with the fact that I was looking at for a stronger, for a weaker US dollar, sorry. Also, on the GBP USD and Euro USD analysis that I shared my opinion, it was for a weaker US dollar, and also gold had to create the bullish scenario. However, also the bearish scenario was likely to happen because we are not market makers, the reason that I placed it here. However, it worked out very well. As you can see in the current conditions, the price already stopped above the inverse head and shoulder pattern. But we have to be also careful because we don't have important events this week. So if price is going to manage to hold above the neckline of the pattern, it may push the price up again. It may push the price close to 2000 and 2003 where it was before. So these are two important areas for the moment. However, the price has to stop first because we can never know what may happen. Despite the fact that the data, non-farm payroll data, were not so good, we see that the price increase came down, and this speculation may also create another sell-off before the next movement. So it can move down where it was also before. This is a pattern that is still in development. It is still looking at for a possible bullish opportunity, but the only focus that I see is related only with the war. So as long as the war has not finished yet, or probably as long as it develops, we may see the price doing ups and downs here. We're not expecting big bearish moves for the moment, and in my opinion, this is creating something different. This is creating a possible trading range between these points here, considering that the market is not taking a clear direction. That is why we have to be careful. 1970 and 2000 is a possible trade range area for gold. This is what may also happen here. We are in a possible development. Only any escalation in the war situation can push the price up again. However, I would like to be careful because the war is going on and nothing is happening with the gold price. So as long as 2000 is already holding here, we have to be careful because we may see also the bearish move take shape after the price develops more. So, but this will happen with time, it will not happen now. So far, we are in the current situation that I explained. So, the price may do these moves. For US, I would like to look at US 30 this time, considering that I didn't look at it before. The current picture is very ugly overall. Just for me to read the messages. The guys, Shazada is writing, "Hello, sir. Tomorrow will be my first time trading in my life. Could you please suggest any aspect of trading that are important to me as a beginner?" This is not an easy question because the first day should be related also with the understanding of the market and not only to open an account. Probably I may create a topic during the coming week, considering with this question is very important for a newbie trader. I think that should not be related with only one advice because one advice will not make you a trader. We have to be very careful, and trading is also a learning process that never ends. So, one step at a time, please. Just take it easy. In my opinion, you should risk small. What is very important and a big mistake that everyone is already doing as a newbie trader or as experienced trader, let's say, is that many are already risking their entire account in one, two, or three trades. So it's the biggest mistake you can do. In my opinion, you should use only a limited risk for each trade. It can be 1% on each trade, 2% on each trade, 0.5%. It depends from your trading account. And the smaller this number will be, it will give you more trading opportunities in the market. So you are going to trade and it will give you time to learn at the same time. Let's say if you are going to risk 1% of your account balance on each trade, that looks very small, it will give you 100 trading opportunities to take the chance to trade in the market. If you are going to use a 2% risk for each trade, it will give you 50 times the chance to trade in the market. So even if you are going to gamble, let's say, the wrong way of thinking, because you should not gamble with trading, you are going to have all the time the chance is 50 to 50 to win. So you can imagine this type of solution, 100 times to trade, and on each of them you have the 15% chance to trade. But also in this situation, it is a must that you have a trading plan well detailed in advance. So this is an overall, let's say, advice, but it is useful all the time as I see. However, I will create a topic about this because it looks very interesting and it may help also all traders. Another member is asking for oil. Yes, US 30. I'm going to look at US 30 right now. Just 1 minute. For US 30, we have to be a bit careful considering that we are going to look at from a daily chart. The price already created these five wave movements. So if we are going to be in a Elliott wave move so far, it is likely that we may see one correction and probably this can be all correction and it can move down, or we may see also a BC correction and it can move down. In the current conditions on the daily chart, the price already stopped in this area. This is where we have to be very careful. We already have the skills that are well positioned in this point, close to 34 and 130. What we have to be careful is because US 30 all increased with a very big volume from the lower part, so this was very aggressive, and it is likely that we may see the price creating a bearish wave from this point. However, we have to see the price reaction during the market opening. It is likely that it may move down, considering the resistance zone that is coming from above, but it has to prove this bearish wave because we don't have anything yet. So let's say any move above this area can create any accumulation and the price may continue to increase as well. However, I think that we may see any small correction considering that the price didn't increase further. Also, on a 1 hour time frame, we don't have anything yet here. A small bearish reaction, as you may see, that invalidated the previous candles. This is a big shadow that was created on 60-minute chart. But the problem is that this is not enough to initiate bearish move. We should see the price to develop more. So look at what the price already created during the previous time, and we should see more development before it moves down from this point. I can't say at this moment if the price is going to increase further or if this is going to move down, but considering that it stopped in very strong daily area, and if we are going to extend this area also on the left side, you can see that we have structure zone again. It is likely that the price may move down rather than it grows more at this moment. So let's see, because we need more price development. I don't have US 100 chart prepared. I'll continue with Bitcoin and Ethereum so far, and we may see also oil. Related with Bitcoin, I think that we have to be very careful. Everyone is looking at for a bigger bullish continuation movement, but I don't see any reason why it should explode in this way on the weekly chart. Uh, on the left side of the structure, we may see that already stopped near this zone. We may see the price to stop again here, and it can push the price down further. But we may see also another possibility from this point, that the price may spend time to accumulate in the current area here. Bitcoin is already testing a zone that was seen for the last time on May 2022. It may spend some time here. It can take different shapes, so I would say it is better to stay away from Bitcoin for the moment. You cannot trade this at all. The market probably is a bit skeptical about the next movement. But what I would like to share with you is Ethereum. I shared this analysis also yesterday. The price was at this point when I shared it, and so far the price is above our flag pattern. Uh, just 1 minute, please. Okay, so I am back. I had a problem with the charger. For Ethereum, as you can see in the current price position, we had the type of pattern that was taking shape yesterday. It was very ugly how it was taking shape, but today we may see also a breakout from this area. So this is showing that the bullish volume is already increased. We have a bullish breakout, and I think that it is likely that the price should test the top of the structure here. The reasons that I'm looking at for Ethereum to increase further in these conditions are very simple. The first structure zone is dating back on July 2023, so 3 months ago. It is not too far away. The previous top was created, this is again on a daily chart, on April 2023. And if we are going to look at on a weekly chart, the current price position where Bitcoin is right now is this area here, and this is dating back on May 2022. But this area here corresponds to the price target 2500, which is too far away from our area, and this is creating, in my opinion, more chances for Ethereum as a minimum to reach our zone, so 2015 and 2100. In my opinion, this is going to be the next market mover. We have seen that after Bitcoin moved, all the other altcoins are recovering in the market, all of them, with big steps and with small steps. And in my personal opinion, it doesn't make sense that Ethereum is in this situation. So all the market players are going to look at what didn't move previously, and everyone is going to create positions. So far, this bullish breakout is very interesting, and it makes sense that the price should continue from this moment here. Probably we may have a question that what may happen on Bitcoin. Probably with Bitcoin is not going to happen anything at all. You can see that also the 4-hour candles, since when the price created the bullish moves during the October 24th, 23rd. After that, the candles are very small, so we may see Bitcoin been only moving small moves ups and downs during these moments. So this is the only good trading opportunity that I see in the market that may happen. So I hope the guy that asked about the crypto market is satisfied with this. I think that this is going to be a very good trade, Ethereum. And the last one will be US oil. On the current situation, this is an old chart that I'm still holding for the US oil. Uh, this is getting very weird in my opinion. I'm not understanding at all what is happening. The price during this already tested these areas on a weekly, on a daily time frame. Just one moment. We may see that US oil already tested 80 and it is not making sense in my opinion. During the previous time, this is dating back on October 6th, this point here. And if we are going to look at these points in a different perspective, I can say that when the price was at this point, I have discussed also during the previous live streams, during the previous videos. This is dating back on at the end of August. We saw PEC coming out with different comments. They were not happy with the price of oil. They created problems, and we saw oil to increase up to 95. And since when the war began, we may see a PEC that is doing the impossible to push the price down. I was expecting this bearish movement, considering with the inflation data and what I have explained also before related with oils. In my opinion, oil is only a cheater's game, and I don't change my opinion about it. But what is very strange at this moment is that it is not related to the technical part, but at the same time that we are having problem with the war, the gold price is getting very expensive. We may see that oil created only a small move here, created a bull trap. Probably everyone was looking at for the price to test 125, but the price didn't make this movement. So all of this is very strange situation. Don't know how to interpret this move this time. It's very weird how it was created. So far, the price is doing ups and downs, but without clear direction. So I'm not sure what may happen again with oil. We have a possible bullish move or bearish move. This is an area that we may see. However, I'd like to be very careful because the sell-off is happening in aggressive waves. Look at how aggressive candles we saw during the previous days. In my opinion, I would say that it is better if you stay away from oil, but any breakout above 83.5 may create any bullish move. It can be limited up to these areas here, the structure zones. And any bearish breakout may create more downside. However, also on the short side, we may see the buyers to join the market and they may push the price up again, considering that the current situation is not good at all. I would say that it is better if you stay away, don't take oil at all, in my opinion. Stay away. Let's see how the situation, if the current situation of the war will take any clear direction, and probably later we may trade oil. This is very strange in my opinion. So this is overall. Please don't forget to like and hit the like button. I would really appreciate it. It will help the channel a lot. Thank you so much. So guys, this is all for today. let's see what the new week will bring for us. So remember that the economy calendar is almost empty and the market should not create moves. So probably we're not going to face a very boring week. Probably the market will not move too much. We have to be careful by opening positions and mainly swing positions. I would say that during the week we may see only small moves. The market has to absorb everything what happened from the previous week, and probably later we may see any type of uh, repositioning before the new moves. So this is overall. I hope you enjoyed the analysis. Thanks for watching, and don't forget to hit the like button and follow. Thank you. Have a good weekend. Bye bye.